Welcome back. The market is very volatile. This graph will not tell you, but just in the while we were in the break, there's a bit of a decline which has also happened. Now today's expiry, so the market will keep throwing people out as well. There's the candle. I mean the chasers. The market will keep doing that. But the larger picture is that the dips are getting bought. And once again, it will begs asking the question: who really is buying like Gay Abandon over the last couple of days? And today also the dip has been really bought big time. The mid-cap index, of course, in the green. The Nifty, which was really building up a nice rally, by the way, has just seen another bit of knock. Anyway, we've got the first hour low now, which is sort of sacrosanct for both Nifty and Bank Nifty. Bank Nifty, of course, being the stronger index, but the Nifty as well is seeing a bit of a recovery. Let's move on then. RITES is a stock in focus. It's in joint venture has bagged new order for redevelopment of the Kollam railway station for 361 crores. The share for RITES in this order is 51%. Rahul Mittal, Chairman and Managing Director at RITES, is now joining us for a conversation. Mr. Mittal, good morning. Thanks a lot for joining us. What kind of, in these kind of orders, how much money do you end up making, and how's that spread over the next few quarters?
Good morning. You see, interestingly, this order is very interesting and unique for RITES because while we do about 20-25% of our revenue as turnkey, but this was the first order that we have got on the newly launched EPC mode by Indian Railways. So a few months back, Railways started the EPC mode of tendering, and RITES as a JV bid for this, and we have got this as our first EPC order. So we have 51%, so that means about 186 crores as the top line revenue. These are tight margin orders, but yes, they require very disciplined execution in a tight time frame to optimize the most out of them.
You said these are tight margin orders. By tight, how much, and does that impact your overall margin picture?
No, you see, turnkey projects in any case, turnkey orders are in any case in the range of about 2 to 3% margins. And that is why RITES' total revenue is a mix of turnkey and consultancy. As I said at the outset, we aim for about 20-25% of our basket of revenue from turnkey. So by nature itself, turnkey orders have margins of about 2 to 3%. But as I said, because this is an EPC order, the execution is all the more important to at least maintain these margins.
For most of your orders, actually, your debtor days have improved. If you look at it in the past 3 years, in FY23, in FY20, you had over 113 days, which were your debtor days. And by FY22, it's come down to 96 days. Could this trend improve further, and will that result in, a better balance sheet for you?
Yes, definitely. This has been a very core focus area for us. We're also trying to get all the old debtors in order, and also the revenue which was, say, for example, stuck in our export orders, that has all started flowing in. So I think that remaining constant focus area is definitely going to further improve.
Mr. Mittal, could you tell us what percentage of your, you operate in various segments, right? So you're very diversified. But what percentage of the work that you get on a nomination basis, as of now?
So that's the strength of RITES, and I would say compared to many other sister PSUs of ours, the trend of last few years show that we get at least about 65 to 70% plus orders on competitive bidding across sectors, and that is what gives us the strength. And this percentage is on an increasing trend as certain conventional clients have started more and more of competitive bidding. RITES has started getting more and more orders in the last few quarters itself. Last quarter itself, we got a number of orders in competitive bidding.
Out of this, so out of the 6,000 crore order book, what you're saying 60-65% is through competitive bidding?
Yes, that's the strength of RITES, and in fact, this
so that's
order
that's a big change, right? Because it's a big change. It used to be the opposite, I'm assuming, a few years ago.
Yes, that's a big change. The trend has been going upwards, and gradually, as I said, with every passing year, its percentage is increasing. In fact, with every passing quarter, this is further increasing. Last quarter itself, we got most of our orders in competitive bidding mode. As you see, this order also, the Kollam railway station redevelopment order, this was a very tightly fought tender. And we've got this order on competitive bidding in the open market.
Okay. In international consultancy, you plan to grow your focus over there. Can you tell us what are the kind of orders you're getting and any slowdown because of the, the recessionary fears?
See, international consultancy and Expotech, we saw an all-time high last year. It was about 1,000 crores plus. And out of that, international consultancy was about 100 crores plus. We have been aggressively bidding, as I've been saying, for a number of international consultancy projects. And in the Q1 itself, our international consultancy revenue has gone up by up to 45 crores as against the total revenue of 104 crores last year. So you can see the focus on international consultancy is a very important focus of ours. Recent orders, we've got consultancy orders of about 50 crores from Ghana Railways. We've got an order of about 25 crores from Guana Highways. So this is a continuous focus area to grow more international consultancy beside export of rolling stock.
Okay. We'll leave it at that. Thanks a lot, sir, for joining us, and all the best for the quarters to come. Well, that's right. But moving on, Adani Wilmar's Q1 earnings were strong year over year, but there's been a mild dip sequentially because of edible oil inflation, and that's, of course, hit the entire industry. To understand the price picture and the FY23 outlook, we're joined by Anshu Malik, who's the MD and CEO at Adani Wilmar. Mr. Malik, good morning and thanks a lot for joining us. Can you tell us what is the current edible oil prices? How much has it fallen from the top and how much have you been able to pass on?
Good morning, Sonia. Over the last 3 months, the edible oil prices have come off, and that should be in the range of around 20-25%, and almost identical value has been passed on to the consumers. I think all the companies have been able to pass on the benefits to the consumers. Going forward, we hope that the prices remain stable and further comes down with the harvest that is coming up in October onwards, and India is going to have a good soybean crop. US is also going to have a good soybean crop, so we expect the prices to calm down. So as we go, the festival season should be good.
So can you tell us what does this mean for edible oil segment itself? Your revenue growth was very strong in quarter gone by, but the EBIT, the operational performance EBIT was down about 10%. What is the expectation for the remaining quarters of the fiscal?
See, in Q1, our volumes have grown by almost 15% over last year. Edible oil also we have grown in volume by 6%, food FMCG by 53%, and industrial essentials such as castor oil, oleochemical, we have grown by around 22% in volume terms. Value terms is 30% because basically because of the inflationary trend. Now, EBITDA, when you say it has come down, it's only as a percentage, because when the value goes up, obviously there's a percentage might come down, but on absolute per ton, which we generally measure in terms of efficiency of our performance, we have been able to manage that well.
So, Mr. Malik, what would both volume growth and margins broadly look like? Will they look up in Q2 and for the full year FY23? Can you give us some guidance?
See, going forward, Q2 volumes so far has been steady. But going forward, see, we expect the second half of the year, October onwards, the rural consumption coming back into action. We did not see a good rural consumption in Q1 as well as Q2, but after harvest, we all feel that rural India will consume more. That is one big thing. Second, our HoReCa and out-of-home consumptions is also growing. And I expect that second half of the year, we'll see a big boom in out-of-home consumption. We have all the products which goes into out-of-home consumption in hotels, restaurants, particularly basmati rice, edible oils, wheat flour, maida, besan, and all these products are
Mr. Malik,
looked
but
upon
out-of-home
by
consumption
the
is booming as is now, right? Has been booming
which
for a while.
Yes, it's only in the last 2-3 months that we are finding that the traction has come. And if you see across the country, people are moving out. But more will happen after October. This year, the festivals are also ahead by 15-20 days. So October should see a big month for all of us. And followed by up to Christmas, there is no looking back.
Okay. You're sitting on a strong market share, almost 19% of the market in the edible oil space. Has it gone up since the last time we spoke?
Yes, it has gone up. We did that at around 18.8. It is now 19.6. We are growing faster than the market. We will continue to do that. And that is happening because of the extensive distribution coverage that we are doing in the rural markets. And I personally believe that the rural market has great potential. Once they come back into consumption, I'm sure we will see big boom because the prices of essential commodities such as edible oil has been high and it has impacted per capita consumption.
Okay. You know, I have to ask you about the food and FMCG business because over there your volume growth has been very strong. Q1 volumes were up 53% year on year. But now we are seeing other large players getting set to enter, right? I mean, Reliance is going to be entering the FMCG business very soon. Would that sort of skew your numbers with so much competition coming through? And what is the volume growth target that you have?
See, it is always good to have strong competition. One, we can see that the staples, which is essential, like dal, besan, rice, basmati, non-basmati, wheat flour, sugar, all these are around 8 to 10% branded. 90% is still loose. Now, in any such daily essential, if the market of loose is so high, it gives great opportunity for players like us to garner share. Now, I don't think a single player like us can change the consumption of loose to packed. There are requirement and player for at least 2-3 big players, and I'm sure in the next 4-5 years you will see that big players have changed the way staples is consumed in India.
So what is the target share of revenues from the non-oil business? Currently, you get about 11 to 12% of your volumes from the foods business. You had a target of 20 to 25% in the next 2 to 3 years. Do you stick with that? Do you think you can do better?
See, the food volumes are increasing. Last quarter, we grew at 53%. Obviously, the value has also gone up. However, edible oil prices are almost 5 times that of wheat flour. So even if the wheat flour volumes goes up at 53%, edible oil, even if it goes up by 5%, it takes care of all the values. So I think going forward, we will be pushing more and more volume for essentials, particularly food. And value-wise also, I am hopeful it will go up. Once the edible oil market prices comes down, obviously the share of food will look up.
Mr. Malik, just to press on that point, with a large competitor entering full-fledged in that space now, the FMCG space, you think broadly, price-led growth maybe just from a competitive intensity standpoint, may be constrained? What is your own sense?
See, the staples business is very large in terms of volume. Edible oil is only 17 kilo per head. But when you look at wheat flour, it is 60 kilo per head. Now, out of 60 kilo, if only 10% is branded, so you have 90% open. I think there is enough scope for all of us to grow. We don't have to snatch each other's share. We only have to see how we can convert loose to packed, unbranded to branded, and make products more healthier, better in terms of value, and give doorstep service to the consumers. If we can do that, I think all the competitive brands can grow fast.
Okay. Any acquisitions on the cards? You had earmarked 500 crores for acquisitions. Anything that you've narrowed down on?
See, this part we always keep on studying. We have a team which keeps on scanning possible opportunities. And it's a continuous affair that we have been looking at. we will surely have some work on it completed by March 23. I hope so.
All right, Mr. Malik, we'll leave it there today. Thanks a lot for joining us. That's Adani Wilmar. The market, by the way, is seeing a very stunning reversal. The Bank Nifty could turn in the green for all you know. It's now down only about 48 points. 39,500 is what you have on the Bank Nifty. Keep in mind, today's weekly options expiry. So if this morning you sold calls, given the gap down, there could be a bit of a trouble. 700-point recovery from the morning lows. And Sonia, this is one thing which, a bit of an unwritten law in the market. Just in the near term, you follow what the FIs do, and in the medium term, you follow what the DIs do. You'll notice that, all through last year when the market was making lows, DIs kept buying, right? And they are more medium-term investors. But if you're someone who wants momentum, then focus on, you could argue about who's buying, what kind of color of the money is. It doesn't matter. At the end of the day, the thesis is that, you buy the dip and just look at how. Today, in fact, I dare say is a better day for bulls than maybe even Tuesday, because today the market gave you a dip to buy.
Yes.
On Tuesday, it gave you no chance.
It just started well in the green on
Exactly.
Tuesday,
Today,
yeah.
at least it gave you a chance to buy. And look at that. Sorry.
Absolutely. No, I completely agree with you. I mean, this has been a rollicking market, right? Every dip is getting bought. Mid-caps are now well in the green. And the market, the Nifty is now up 700 points from the lows. In fact, we will get Mitesh Thakkar for some technical trades on the other side, so don't go anywhere.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
To be or not to be?
काट!
To be?
काट!
To be?
काट!
क्या हो रहा है यार ये? एक्टर से कट पुतला बना दिया है। अबे कट करना ही है तो अपनी लाइफ से ये पुरानी लाइट्स कट करो। मतलब जिसका एलईडी लगाइए और अपने पावर बिल्स को और एनवायरमेंटल डैमेज को भी कहिए कट। That is the question.
काट!
जिसका एलईडी लाइट ईयर्स अहेड। नहीं मूर्ति, कोई फायदा नहीं अब। मूर्ति, कोई जरूरत नहीं भाई।
नई कार खरीदने से पहले एको इंश्योरेंस कंपनी चेक करे और 50,000 तक बचाए।
Welcome back. Well, the market is very, very strong. I mean, yes, the Nifty is down 120 points, but the reason I say that is the intraday recovery. And of course, on the Bank Nifty, that's the one which has really led the market, which was in the green. The mid-cap index in the green, and the consumption names also doing quite well. The top gainers now are Bajaj Finserv, Tata Consumer, Bharti Airtel, Eicher Motors, Asian Paints, Maruti, SBI, Titan, IndusInd Bank. The key point is all of them are domestic focused stocks. While on the downside, you have all the sort of commodity or export names like Hindalco, ONGC, TCS, Infosys. Tells you about the texture of the market. Mitesh is back with us. Mitesh, the impulse was to buy the dip. You also spoke about it this morning. But what next? On days like today, do you extend your sort of winning positions or book here? And what would be your stock calls?
That is always the next level question. Once you've bought the dip, the market has gone up, what do you do? So I think on the Nifty, if you bought early in the morning, anything around 17,500, 510 levels, maybe not immediately in the opening around 17,485, but 17,510, 520, 525 levels. I think now trail the stop loss to 17,570 or just maybe 10 points below that. So at least you have a trade which will, eventually be profitable, though you would want to milk more out of it. I think we have a good chance of heading towards 17,800, 880, which is what I spoke in the morning. So in that sense, I think just trail the stop loss to about 17,560, 565 and hope that this recovery continues, which is what I believe that, the odds are more favorable towards that. And maybe if not today, maybe in a day or two, I think, we'll head closer to 17,800, which is where then you would want to take profits. On the stock side, Asian Paints and Ashok Leyland are two stocks which I recommend. Disclaimer, Ashok Leyland, we have some positively biased call spread positions over here. So we have some interest. Here, I believe a stop loss of 154.5 would work well, and the stock can possibly head towards 171, 172 to begin with. Eventually, I'm even looking at higher levels. And Asian Paints also very strong recovery on the short-term charts. That's a buy with a stop at about 33.90 for targets of around 35.50.
All right. Since you spoke about Ashok Leyland, I just want to mention that most auto stocks are sitting at fresh 52-week highs today. So Ashok Leyland, Maruti, Bajaj Auto, TVS Motor, Escorts, Kubota are all sitting at fresh highs. It's been a dream run for the auto sector in 2022. So let's talk a little bit about these stocks, right? Why is Ashok Leyland rallying so much today? Because the company bagged a mega order in the bus segment from UAE. This order is for 1,400 school buses and the order value is $75 million. So it's Ashok Leyland's largest ever order in UAE. And Leyland will also start testing demand for electric buses and medium and heavy commercial vehicles in UAE. So the company says that bus demand has picked up in a big way post the reopening of schools and offices, and they're here to capitalize on that. Let's not forget, Ashok Leyland is the market leader in the MHCV bus segment in India, and it's the 4th largest bus manufacturer in the world in terms of volume. So that's on Ashok Leyland. The other stock I'm looking at this morning is Escorts. Now, Escorts Kubota has hit a fresh 52-week high today. The August sales are looking quite good actually. It's a 7.3% year-on-year growth that Escorts has reported at 6,111 units. Good growth in the domestic segment. It's an 8% growth year-on-year. Export sales are up almost about 4%. The important bit is that the management commentary is positive. They say that the company has in fact guided for a better September. They say that we should see a better September and most likely a stretched peak selling season of 3 months. The overall macroeconomic factors and the farmer sentiment remains positive. So not only have they done pretty well in August, but they're guiding for a better September as well.
Okay, so that's on Escorts Kubota. Remember, it had a bit of a dip once that open offer was over, but since then has made a big comeback. Back above, by the way, now that open offer price on the stock. Let's see what Biocon is doing, because that's where we had a bit of a negative news. The stock's still down about 2% or so. Rima is going to revisit the news on Biocon. Rima?
Thanks so much for that. So, well, the stock is under pressure because US FDA has issued 11 observations each for its 2 sites in Bengaluru and 6 observations for its site in Malaysia. These, the US FDA inspections took place in the month of August between 11th to the 30th. Now, we had a chat with the management earlier today and they said that there were no systemic, no compliance issues which were cited post the US FDA inspection. There were no data integrity breaches as well, which were observed by the US FDA. The inspection was done for 3 different products also. So that was the reason why the US FDA came to the sites in the first place. The company will respond to the US FDA within the next 15 days. And as of now, they do not expect any impact on the company's product pipeline in terms of the approvals as well. So the company said no changes in the approval timeline in our chat with them earlier. Back to you.
Okay, Rima, thanks a lot for that update. Well, that's curtains down on Bazaar for now. But, you know, I tell you what, the mid-cap index is now up 66 points, and the advanced decline, just leave you that 2:1 in terms of advanced decline that we have now. When we started the day, it was at 1:3 in favor of the declines. We're ending the show with 2:1 in favor of advance.
And it's I mean, across the board, right, Anu? Just look at it. Banks are hitting fresh highs. Bank of Baroda is at a fresh 52-week high. The entire travel space has picked up in a big way. Indian hotels is at a fresh high. And now you have more auto stocks getting added to the list. But the key theme here is domestic. Domestic consumption, domestic autos, domestic hotel companies, all looking good. I guess it's better to look inwards when westwards there's a lot of pressure.
The market's given you a theme, Sonia, for last many days now. Especially on days like today, you have to go all in on the domestic stocks. Avoid export-oriented stocks for some time. Focus on the domestic stocks. That's where the traction is, and that's what you are seeing. Consumption, autos, and all these banks, those finance-led consumption doing well. We'll take a break. Up next, our special segment, Indianomics, is here. Lata will be